Alright, so general ledger, let's see what one's first. Cash.
What are we on now?
437 in the workbook.
437.
Yep. Okay. Account is cash. The date is December 31st. See, our item is the balance of our cash account. Post reference. Let's see here. Debit, credit, debit, credit, balance. Okay, so what are we going to put in our post reference? Check mark. Okay. So what is our cash balance as of December 31st? 22,379. Okay, so our next one is petty cash. Okay, that is December 31st, post reference. What is our balance on that? Okay, next is accounts receivable. What is that? Okay, next is merchandise inventory. What's merchandise inventory? Okay. That is as of January 1st. Correct. Okay. So what is our post reference on that? Nope. What page do you get that information from? 24. That's because that was the balance at the beginning of the year. Okay, so what do we have? Do we have a debit or a credit? For what? What? Yeah, what is our credit amount? What is it? 15,600. Okay, so yeah, 15,600. So then we subtract that from our debit. And we get $237,414. It's like a puzzle, right, Jordan? Okay, so our next one is supplies office. I forgot to write the account numbers up top. I'm writing in the account numbers. I forgot to write those in. What? No, those I haven't got that far yet. I'm going back and putting in the account numbers. Supplies office is 1145. Okay. So supplies office, December 31st. We're on supplies office. The balance as of December 31st. It's not. Okay. Let's see. So what now? For the next one, yeah. And then the date is the 31st. Or wait, hold on. Yep. Okay, so is that a credit or a debit?
It would be a credit, sir.
For how much?
Where you get these numbers from?
Yep. That's what we did yesterday. Remember, whenever we adjust something in our journal, we have to do it in our general ledger too. So then when we make our final reports, like our income statement and our balance sheet, then we have the correct numbers. Okay, so what is our balance then? Yep. Well, if the debit is higher than the credit, then you're going to have a debit balance. If the credit is higher than the debit, you will have a credit balance. Does that make sense? Okay, so next is supply store. That is 1150. Okay, so what is our balance as of December 31st for supply store? Debit or credit? Okay. Then we have a credit for 2,940, correct? So what's our new balance? Does that look right? Okay. $11.60. This one is for prepaid insurance. So at the beginning of the year, we had $4,300 worth of insurance. Let's see here. So after our adjusting entries on our prepaid insurance, our balance at the end of the year is $1,132. So why is that, Jordan? I know, but why? No, but why does our prepaid insurance go down throughout the year? Okay, what, Chuck? Basically, we're using up our insurance. Okay, so if we buy 12 months of insurance at $1,200 each month, we're going to lose $100 because we've used that month's insurance. Okay. All right. So then we have accounts payable. Okay, so our accounts payable, $10,615 credit. Why is it a credit? Because it's a liability. I'm glad you've learned something through the year, Jordan. I'm so proud of you. It is like a puzzle. I didn't really pay attention. All right. So next we have our employee income tax payable. Okay, employee income tax payable. What is our employee income tax payable? Good job, Joe. Social Security. Okay, Social Security tax payable is what? Next, we have Medicare tax payable. What is it? Okay. Next we have sales tax payable. Is that right? Okay. So next we have unemployment tax payable. Federal. What's our unemployment tax payable for the federal? $13.60. Okay. What's our state? Okay. Do we have any questions over anything so far? Okay, next is Emma Boys Capital. This is where we might run into some trouble. Okay. What is Emma Boys Capital? Okay. So what do we need to do now to Emma Boys Capital? Okay. So what's next? What's the numbers then? Hurry up. Whenever he gets back. Okay, so Emma Boys Capital, what do we need to do? It's a closing entry. Look at your journal. What did we do in the journal? Well, that's always true. Turn to page 435, and what did we do to Emma Boys Capital? Yeah, what did we debit? $18,225. We did. That was the second one. What did we do before that? Okay, so what was that number? Mm-hmm. Is that what you guys got as the new balance? What now? Because we have to cancel it out. So, if we look back, we have $10,163 as our income summary. We have two partners sharing at 50% of the capital. Okay, so each of them will get half of the capital. If you remember yesterday, that was where the mistake was in the book. I told you the opposite answer because the book was wrong. Are you still confused, Haley? Remember, we have to get everything out of our temporary accounts and move it into our capital accounts. So first we move it into our income summary, all of our expenses, and then once that's accounted for, then we will move it into our capital account. Okay, now we have her drawing account. Okay, her drawing balance was what? $18,225. Okay. So what do we need to do here? So we need to credit that so it will cancel out. Remember, we need to put a dash in there. I'm just going to put that in there to show that there's nothing in there. Okay, so remember, we're crediting to cancel out the drawing. Why are we doing that? It's a temporary account. We have to get everything in our capital account. So if you remember through our journal, what we do is whenever we credit out of here, where does it go? To our capital.
Where's it go?
No, that's our expenses. All of our expenses go there. Our drawing goes directly out of our capital. So whatever we withdrew throughout the year, we're taking it away from our capital. Okay, so now we have Chris. Okay, his balance is what? What was Chris's capital balance? Okay. So now we need to deal with our closing entries.
Where are you getting the capital from? Like that number you just got from the capital.
That was his amount at the beginning of the year.
You just look back to that. That. It all comes from that, right? Is there going to be a general ledger on our test?
Yes, there is.
So it came from that?
This is the adjusting and the closing entries. If you look at, let's see what page it's on. 443 in the book gives the numbers. Okay. And then we have to enter in our adjusting and our closing entries. So what are we going to do next with our capital? Okay, if they're partners and they're both 50%, if they both own 50%, okay, so we're going to do the same thing we did up above. Does that look right? Okay, so now what do we need to do? 18,400. Because where's this number coming from? Yeah. What account is it coming from? It's going into the capital. Yes. So we're moving it from drawing into our capital. Okay. So let's see. So through the year, Chris withdrew $18,400. What? That's for Emma. Their drawing amounts are different. Yeah. This will make more sense after the next one. Yeah. You know how you said it's a puzzle, Jordan? Here's your puzzle. Here's how you piece it together. Sure. Okay. Chris is drawing. Okay, his balance 18,400. Jordan, look. This right here, look. We have a debit, so we credit it here. So there it is. You see that? how it is moved out of the drawing into the capital account. What? Should be. Because drawing is a temporary account. You're not stupid. You just need to do your homework. Okay, here's gonna be the fun part. Income summary. Alright. You guys want to carry on, or do you guys know everything? And okay, let's proceed then. Okay, so what are we going to do first on our income summary? Nope. Look back to page 435. You just go straight down the line. Yeah, 435 in the workbook. $15,600. Where did that money originally come from? That was taken into account for our merchandise inventory. No. You only write that if it's for the balance. You only write, the only thing you write in the item is balance if there's a balance on it. Okay. $275, $60. Okay. So what's next? $269, $623. Okay, and that's coming from what? Yeah, that's a result of all of our expenses. Okay, so when we're canceling out all of our expenses, we get this number. Is that right? Yep, that's right. Okay, so the last step, what do we want to do with our income summary? Since it's a temporary account. all from the journal. Whatever you do in the journal goes in the general ledger. Any questions? Okay, so next we have sales. What was our sales balance? Okay. So what do we need to do with sales? Congrats. Yep, pretty much. Purchases. That is account number 5110. The balance for the purchase is 151,740. So then debit, credits, cancels. Advertising expense. Is 6110. Our balance is what? For advertising expense? Okay, next is credit card fee expense. Okay, that's 6120. No. Correct. Debit, credit, cancels. Okay. Next, insurance expense. That would be 6130. Okay, so what is our insurance expense? All right, so we're on insurance expense. 6130 is our account number. We're going to debit $3,168. So that would be our balance. So then what do we have to do after that? Cancel it out. Okay. So then we have, what's next? How much is it? That account number. Miscellaneous expense. Okay, so next is payroll, taxes, expense. 6150. Okay, payroll, taxes, expense. Oh, I forgot to do something up above. Miscellaneous expense. Okay, what's our payroll tax expense? 6917. Cancel that out. Yeah, why are we canceling them out? Temporary accounts. Okay, so now we're on rent expense. $61.60. What's our balance for rent expense? Rent expense. Okay, next, salary expense. Okay, 68,150, correct? Let's cancel out. Next, we have supplies expense, office. What is our supplies expense? $2,568. $2,568. So then we're going to cancel. Okay, then we have supplies expense store. That is $2,940. And then our last one is utilities expense. And our utilities expense is, it has a balance of $3,528. So then we credit it to cancel it out, and that is our general ledger. You guys have any questions on any of this?